What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money investing in fractional real estate online, as usual. Today, I just what I'm really hoping with this video is to just start a discussion about, what are your expected returns when you're investing in fractional real estate online? And I want to put this into a little bit of context, but just, I'm going to talk about what I think, or what types of returns I'm getting and which ones are attractive to me. I want to make sure that you understand, like, none of those are guaranteed. You want to do your own due diligence on all the platforms and all the properties that you invest in. I always get a little bit hesitant about talking about returns on anything other than like actual deals that I finished. Those ones I always post, but before it happens, I don't want people to like jump into a deal that I'm in thinking that they're gonna, do a certain level of return and then not get there. But where am I coming from with this today? So I posted about something on X, about one that I am currently invested in, right, where I'm buying it at a 30K valuation. We have it for sale in real life. This is one that I don't actually think is going to be a great deal for me relative to some of the others that we've done this on. And this is a property on Lofty. Before I forget, please like and subscribe. If you want to join the conversation on our Discord, there's a link in the description to this video to the Fractional Real Estate Investors Discord. We talk about all different platforms: Lofty, Mogul, Ground Floor, Collab, Arrived, Saul's Lot, any of the ones that you can think of. There's also in the description to this video links to the places where I'm currently investing. Just because I've invested in those sites doesn't mean that you should. But I'm hoping that I'm curious. We had a little bit of a discussion the other day about what returns people expected, but I'm curious what you expect as far as returns when you're investing on any of these platforms, and what got you to come to the space to invest in fractional real estate. So, like, I talk to real estate investors in the real world all the time. I understand what most of the time what they're looking for, what they think a good return is. One of the things, a lot of them compare what they'll get as far as returns go to like an S&P 500 index fund. And I had just pulled this up to just show historical performance. This is just from since 1957. And I don't even know what the date of this article is, but at that time the average return had been 10.13%. But somewhere between 8 and 10% is what a lot of people seem to think is what they're going to get in the stock market. Now, it's not necessarily true in any given year, because a lot of years they do way better, and a lot of years they do a lot worse. And so it just turns out that the average is a certain amount. And so I know that that's one of the benchmarks a lot of people are comparing their investing to. But a lot of times people are attracted to real estate for different reasons. They like to have more control. They're going to get some tax benefits, maybe. They like the fact that they can finance their deals, use other people's money. So there's a whole bunch of different reasons that attract people to real estate. But I've realized, like, I don't really understand yet who the typical fractional real estate investor is. When I got into this space, not too long ago, one of the things that I assumed is, like, a lot of the new investors that I talk to that maybe aren't ready to buy properties in real life yet, they don't have enough money, would be interested in investing in fractional real estate. I talk to a lot of these people, and many of them, for whatever reason, don't actually pull the trigger and do it, and it's surprised me. But I think there's a couple of things going on, right? I think that one, most people, if they have heard of fractional real estate investing, which most of them haven't, and so if you haven't heard of it, you think, okay, it's new, it's scary, there's risk involved, and so that shuts down a lot of people. Some of the people that have heard of it, the most likely site they've heard of is Arrived. But then when you go to Arrived, I just picked the first property they have on their platform, and it seems pretty typical to what they have in general. Their projected return for this deal is 5.9%. It's just not very exciting, right? It's lower, and that's the cash flow plus their projected appreciation. It's just not super exciting when you compare that to a stock market return, like, especially because they have limited liquidity. Like, you can't actually just sell out whenever you want to. They're starting to have this secondary market where that might be possible, but in general, it's not like the stock market where if I needed that money, I could just go sell. So I think, being the biggest mover in this space and having just like really unattractive returns as far as I'm concerned, I think that it ends up, turning a lot of people away. Um, so I think, I mean, obviously they're doing something right because I think they are the biggest platform out there at the moment. If you look at like how much they've raised, and they focus on the safety of it, they don't really compare their returns to other things as far as like any of the stuff that I've seen. They're just like, hey, these types of returns, and they focus on this being a safe and reliable return, which is what attracts a lot of people to real estate. I think the other one that a lot of people have heard of is ground floor. Um, and again, I mean, like this is your returns on this, and this is their flywheel portfolio. But my on, so this is one that I am invested on. I actually think it does present good risk-adjusted returns. Just my opinion doesn't mean it's something you need to invest in, but uh, the reason that I like it is it's a mortgage product, right? You're actually investing in a loan. In my mind, that makes it more secure than investing in real estate. Like it's secured by real estate, but it's the debt piece, so you're in sort of the bank's position. It makes it a more stable cash flow, as far as like you don't have any corresponding expenses if there's a non-payment. But so from a risk-adjusted return perspective, I think it's decent. But my average return on here has been a little bit higher than 11%. But again, it's illiquid. It's not that much better than the average return in the S&P 500. And so, is it enough to get people to jump? I think the answer is some people, right? But not a lot. Um, why do I care about this, right? Why do I care about the space growing? I mean, that's because I talk about it a lot, right? I think that in general, well, I think the real reason, it's very selfish, right? I think that this space is where I'd like to move my money to in the future. At the moment, I don't have a lot invested on any of these platforms. Most of my net worth is in private mortgages, where I bought a property all cash in real life, sold the properties, and then held mortgages. And so I'm getting payments on those over time. And that's, it's a pretty passive way to invest. But it is not as passive as just sitting on the couch and clicking buttons, right? And so I'm hoping as mortgages pay off, as people pay, as I collect payments to put more and more online, the only way I get to do that long term is if a lot of these sites grow, right? Because some of them, um, especially, some of them, to continue to get good returns on them, they need to become bigger sites, and I'll explain that in a minute. But so anyway, I think ground floor and arrived are the two that if somebody's heard of fractional investing, they've probably heard of one of those sites. And arrived to me like it's just really not that exciting. Ground floor, I think it is more so, but it is because I think it's a good risk adjusted return, but it's not necessarily just this really exciting return. It's one of the reasons I'm very excited about Mogul. I think that moving forward, you'll end up, if they can continue to put out the types of deals that they're putting out, I think they'll end up attracting a lot more people, a lot more sort of like retail investors, people that are just not. I keep messing with my hat because the mirror thing is backwards, so sorry about that. If I know I always look like a crazy person in that, but whenever I look over and it's like this, and it goes like that, so sorry. I'm gonna stop that. Um, but whenever they talk about the or no, when I think they'll attract a lot more retail investors. Their average returns that they predict, like when you look at their analysis tab, is somewhere in the mid-teens usually 15% or higher, sometimes 14. But their yields are also really high. So like a lot of them, up to and over 10%, cash on cash returns, and so those become very attractive. Excuse me, from you know even though you can't sell your shares in this, you do get a deposit every single month, provided that your properties are operating well. And so you're basically your cash flow, and because they have very high yields compared to, I mean, like if you look at this arrived one, right? What they say here is we're going to get a 3.69% annual cash flow, and let's just take the first one that they've got here. And their year one, see, that's their average. I wish they would show me the year one right there. Um, I think they used to have it up there because I don't think, yeah, but yeah, you're 10.14% year one, right? And then your levered cash on cash yield, yeah. So you're actually at 13.38%. That's your unlevered, but this is a levered transaction, right? So I mean, like we're more than 4 times the cash flow projected on this deal relative to what arrived is on theirs, right? So I mean, it's night and day. I think, and it's pretty clear. I mean, they've been selling out. Like this one's only been live on their site. I don't even think it's been 24 hours or right around. But they do a pre-launch where they sold some out. And it is one, it's one that I bought a piece of. But again, just because I did doesn't mean that you should do your own due diligence on the platform and the site. But they sell out really quickly, and I think it's because it is I think that somewhere around here, this mid-teens return starts to become more attractive to the average, the average person that's just like comparing it to the stock market. Like, okay, maybe I think this is more risky. Whether or not I believe that's true, it's very arguable. But I think the typical person who's encountering this for the first time is going to think that. Um, and then so okay, 50% higher average return. Yeah, that might be enough to get a lot of people, to move on it. But then the other thing that we run into is stuff like Lofty, and I mean, there's a lot of Lofty's a weird example because I make really great returns on Lofty, um, but it's great returns on small amounts of money, because the way their pricing works, the more of something you buy, the more expensive it gets. It's like a true supply and demand type market, but they're very thin markets. So, you can make really high percent returns on individual deals. And that was actually this one that I started off talking about tonight is a Lofty deal. Um, and, some of them, if you look at the annualized returns I've gotten, have been over 100% from start to finish. And that's because you can do deals quickly. But actual ROIs of over 40% sometimes. But then that's sort of trading on the platform, which it's one of the only ones with this secondary market. There's a couple others, but it's the only one that has a robust secondary market. But if you're just a starting off investor and you come on here and you just look at the yields, which is what I think a lot of people do, you'll be very quickly disappointed because almost none of them maintain the yield that they show initially, right? And it's a very small percent. So you'd have to be one of the lucky few to not be disappointed with your first purchase on here. And so a lot of people look at this and they're like, if they see, okay, it's a 34% yield, that's just too good to be true. You're just not going to get that. I think there's a lot of that mindset. And they're right, I think, because, you might have that because they're always just showing your 1 month yield, right? So it ends up being really, uh, strange. So when I talk to people about okay, what kind of returns do you expect? So I'm like, well, what are you going to do, right? If you're looking for one of these platforms where I'm just buying something, leaving the money there, ground floor and Mogul end up being where you're at with that. But when people ask me what do I expect to return on Lofty, I feel dumb actually, when I say it because I think that I will somewhat easily is until this platform materially changes. I think targeting 30 to 40% annual returns is pretty reasonable. I mean, I've been shocked at the ability to buy stuff, sell the property in real life, and make just really big returns on those. Sometimes some of them were not so great. Some of them were 20-ish%, but again, annualized ended up being bigger. My biggest one so far is 45% annualized to 122. But if you're able to keep rolling these over, yes, some of them are going to be nowhere near that. But a lot of the and if you look at my total portfolio right now, it doesn't look like that because it took me a little bit to really develop that strategy and understand that's the opportunity on here. If I'm talking about, okay, I'm just going to buy and hold something, maybe those mid-teen returns become the same sort of goal. Like if I pick a good operator, somebody who I really think does a good job and is picking good properties in the right markets, I think you could probably end up with similar returns to what you're getting on Mogul with a long-term hold. But if you're willing to like put in the work and do the quick trades and stuff, I mean, I think you know significantly better returns are available. But part of where that's coming from, it's a return on your time, right? Because um, it's not as if I can just sort of automate those, or it's because it's digging into individual properties, finding these sort of arbitrage opportunities where the token's very cheap, but the property we can sell in real life for more money. Um, so I never really know. I have a really hard time recommending Lofty because of this to people, right? Because of, if they say, "Well, where are you putting your money?" Like this is this, and I don't have a ton on Lofty either, but it's where I spend most of my time experimenting right now because um, there is just this potential for these really outsized returns. But it's also, I've just met a ton of investors on Lofty who have lost money, or who are doing these long-term holds and they have been very disappointed, but maybe their long-term average is a 10% yield. I was talking to somebody today that was his average yield over his whole time on the platform was like high single digits, and he was happy with that. And probably if you compare it to a lot of other things, I can understand being happy with that. Um, but I think like it's sort of a you're taking a big risk, right? You have the platform risk as far as like, is this business going to stay in business? It's a new thing. You have your regular real estate risk if there's all that actual stuff, and then um, and liquidity risk because it isn't as liquid of a market as the stock market. And so then, okay, if I'm getting high single digits, or I'm comparing that to just buying an S&P 500 index fund, again, like I don't know that that's super compelling. So it ends up becoming very difficult to really know, like if people are asking like, well, what do what are you making on there? Like I never want to tell people what I'm actually making, other than like pointing out like, hey, this specific deal I bought for this, I sold for this, and actually made this much money. But any of the ones that I'm holding, because of and if you've invested on there, like the way the debt works, it like basically dilutes your ownership over time. And so even if you're getting a great return up front, if I'm holding it for a long period of time, it's not, that's not going to be my long run average return. So, I guess, like I said, my goal today is really to start a conversation. And I'm curious, if you're invested on any of these platforms, what do you actually expect your return to be? Like, especially on Lofty, I'd like to know what do you think you're going to make on Lofty? What's your average? And I have talked to some people who um, have very high average returns, and and then some people who've just really lost. I shouldn't laugh about it, but people that have lost a lot of money. The reason I laugh is because there's some people that have lost a ton, but still spend a bunch of time on the site and on the Discord talking about it. I can't really figure out why. I think it's like they're just hoping the prices come back and they get their money back, right? But if you are one of the guys that I know that's invested on Arrived, he's like, yeah, I'm getting this really small dividend, but I think some of those properties are going to appreciate a ton and I'll make a bunch of money. And I think it might be true for the ones that they bought, like as has been around long enough. Um, I think they have some 2001, 2002 time frame properties, some that might have appreciated a whole bunch. Oh, excuse me. But, in general, I would just take them for their word if they think they're only going to get 6 or 7% annualized returns. I think it's probably true on most of them. Um, and then one of the reasons that their returns are so low is they just have really high fees, right? And so it ends up eating into what your return is. On ground floor, I think probably everybody has similar expectations. Although I have noticed there are some people that just buy the highest yielding notes, which, they are risk priced interest rates, right? Like the higher interest rates means that ground floor thought they're higher risk. And so you would expect um, a similar return over a large portfolio of those loans, right? Because you'd have more failures, and that's priced in. So I think that's kind of interesting. I mean, I think like 10%, 11%, somewhere in there is what I think I would make over the long run. So far I've been at 11, but I haven't experienced any defaults yet. And so, once I start to have some that have some non-payments, I think I'll have a better sense over a longer period of time. Um, Mogul, I think a lot of their deals that I look at, I think some of them that I own, I'm expecting to do even better. It's clear that sometimes they sort of sandbag their returns a little bit because they're just kind of trying to make their deals all look pretty similar. And so, um, like this is one that I bought the biggest piece of out of all of them, and I'm really bullish on it. I think and who knows, I could be wrong. But at the time, it was one of the only ones they had available. So now that I realize they put them out, much more regularly, I'm buying smaller pieces. But some of these have, I think, well, like for example, because this one has really high yields. They were like, we don't really even need to. They're hardly projecting any appreciation on it, right? And like maybe that's true, like because it is a pad split property, and in general, maybe you're not going to get as much appreciation, but um, I think some of these have the potential to really blow out their projections because they are conservative projections on some of them, right? So I think, I'm curious if you're invested in there, what you think. I wouldn't expect it because some of them are going to do worse, right? And we don't know which ones. So if you're getting pieces of lots of them, um, that's what I'm doing. I'm just trying to diversify across a lot of properties and a lot of platforms. But so like, what do I think my total average return is? Like, it's super tough to really to get a sense of, right? I mean, I'm definitely, well, I know it's higher than 6% because I have no interest in investing in a deal like this. Um, Ground floor is what I think is the bottom of my nominal returns are, right? Like I think, 10 or 11% actual returns is probably the lowest amount, of expected return that I'll accept. But again, I think it's more risk adjusted to me in my mind across all the ones I've looked at. It's the safest platform. Um, and then, and I think we go up from there. Like I believe that Mogul will end up producing mid-teen total returns, mid to high maybe. And again, I mean, I like as long as there continues to be failing properties and discounted tokens, I think that there's going to be the opportunity to make ridiculously high returns on Lofty because of how volatile the prices are. I mean, I think it's kind of broken at the moment, right? I think the way their prices move isn't isn't conducive to anybody investing in this stuff long term. Somebody comes in and sells 100 tokens, and all of a sudden, the price on something drops $10. $10 on a $50 starting price is a ridiculous move to make. But so I think that that's part of the problem. Now, at the same time, it's also why there's opportunity. So yeah, I don't know. I mean, like when I don't even know what to tell you what I think I know I said maybe sustaining 30 or 40% total returns, on an annual basis. I mean, it sounds crazy to me. Like it just sounds like way too good to be true to say that. But like with the deals that I've done so far and what I've got my money in at the moment and where those token prices are headed and where the real world sales are headed, um, I mean, 30 definitely doesn't seem crazy to me. Somewhere above 20 for sure. Now, at the same time, there could be, I mean, we've had some just really crazy stories lately. Some DAOs don't even own a property at the moment, like and who knows what the end result of that's going to be. And so, maybe what I'm underestimating is how many losses I'll have on here and how that'll impact my average, right? I mean, um, if even if it's like 1 in 10 actually ends up being a bigger loser, it'll, I don't know. So it'll be interesting. I think it'll be a long time before I'm comfortable even providing like what I think the return's really going to be, because the first I've so far with these sort of arbitrage deals that I'm talking about, we're buying the token and selling the property. Um, I've really only had three that have sold out. I've got another one that's under contract, and then two others that we're in the process of trying to sell. And all of them have been all the ones that have closed already were profitable. The one that's under contract, I think, will be very profitable. The other two that are for sale, who knows? But it appears to be they'll be good, pretty decent returns. But yeah, so I'm curious. I'm curious if on all the different platforms, and if you're invested somewhere else, let me know. Put it in the comments or jump in the Discord and let me know. But if Lofty is the one I'm most curious about. Like, what do you expect to make on here? And if you've been on here for a while, what have you actually made, right? Like, I think that's um, and has it changed a lot, right? Like, I mean, I think everybody who bought in the first year, like almost everybody had to lose money. Like, I don't know, if you've held till now from, purchasing early, unless you've averaged down your basis, I think it's probably even worse. So anyway, I think I just was really hoping to start that discussion. I'm curious what people think. But then, and also the other question I have is, what do you think the returns need to look like to pull more people into this ecosystem, right? Like, we started the discussion with where are these, why aren't more people excited about this? Um, where do you think that number is? I mean, do you think it's something like Mogul's, like 15% or, projected return? Like, does that do it? Does that get tons of people? Or, is it just that they only have a few properties right now, and once they have a whole bunch like arrive, like, is it gonna be just like less attractive? Are they gonna not be able to um, sell out so much? I don't know. That question didn't make any sense at all. Sorry about that. Anyway, that's really it. Let me know what you think. Uh, you know, because I'm just curious. I'm just hoping to start that conversation. Anyway, that's it. This turned into like just a mess at the end. If I didn't say it, I think I did, but tickle the like button. Um, and until next time, I'm gonna just, what am I doing? Yep, you know the thing.